in Minsk. We start our online broadcasting. We have already launched it. Today we're having our new presentation, Belarus Economy Monitor. This event is organized in two languages. We're having simultaneous interpretation, so please select your language channels. You can use the chat Zoom function to ask your questions, and also in the Zoom broadcasting you can also ask questions. We are very happy to see all of you, and I'm passing the floor to Violetta Panasevich, research officer of BIROC, who is going to dwell on how households feel in Belarus. Good afternoon. Today, as always, I will tell you about the attitudes and expectations of the Belarusian households, and it would be nice to see the presentation on the screen. Indeed, the basis of our quarterly monitoring is an online survey that we organize quarterly. About 1,000 respondents are covered. This survey was in May 2024. We had 1,002 respondents, adult urban citizens, and this representation is representative in terms of age, region, and gender. And we have the smallest number of those who have seen the decrease of their income. 26% of them said that their income decreased, but if we remove other factors, then this year is only 16%, and the income decline is mentioned by those who are managers of organizations. That was the outcome of the quarter. And usually these are people who have low income and those who read independent media. Those who read public media, they are more optimistic. Those who read independent media are more cautious. But in any case, the share of those who have seen the decline in their income is the lowest over the all observation period. If we look at the reasons for the income decline, is the price growth. About half of respondents reported that. The second one is decreasing number from clients. Last wave of the survey also indicated a large share of self-employed individual entrepreneurs and business people, but this is not that significant in the monitoring. Today we can see that initially the forex and no increases in salaries were the top reasons, but not anymore. And when we look at the reasons of income decline, we can see that the share of those who save on food is getting smaller. It's only 1/4 of those who have seen their income to decline. And there's a significant seasonal factor. There's a smaller share of people who save on leisure. Let's look at the labor market. In the labor market, we could see that it was hitting the plateau of firings in the last wave. There was a smaller number of there was a small number of people who had known their friends or relatives losing jobs. Right now this figure is higher, but we do not predict it to grow. Still, about half of respondents can see shortage of labor in those sectors where they work, and this is 10% higher than half a year ago. So there's a visible deficit in the labor market. Let's look at the savings of Belarusians. They do not want to save, and they do not cope to save. Only 29% of respondents reported savings, only 7% to save more, and 40% of them do not save at all. Speaking of expenses, about half of respondents spend more than they used to spend half a year ago. Next, we can see the Consumer Confidence Index. There are 5 components. The first 2 are about the economic situation in the country. We have not seen significant changes versus last year. People believe that the economic situation in the country has improved. About half of them say that it is the same or has slightly improved. However, they are less optimistic about the future. 21% of them believe the economic situation to improve, and 24% believe that the economic situation will not change. Still, as always, we can see a large share of those who are challenged to answer the question about the future of the economics in the country. The next two questions are about the financial standing of their families. We have not seen significant changes. The share of those who believe that their standing improved or without change, this is the majority, and they're still optimistic. 27% believe that the financial standing of their families will improve. And the last question, the last component in the index is the attitude to large purchases. The majority believe that there are more pros and cons for large purchases. Only 17% are confident that this is good. 23% speak about better saving. And this means that this situation has changed, and now we can build the consumer confidence index according to the Eurostat methodology. We have not seen significant changes. The index is minus 1.4%. This is still higher than the index in Russia. However, this is lower than in last quarter. In general, we can see the recovery dynamic starting from Q2, and we'll see what happens. But right now we are entering the plateau. Speaking of the Eurostat methodology of consumer confidence index, which has 4 components, Belarus has shrinked a bit. In the EU countries and in the Eurozone, they have a slight increase. The index is minus 13%. However, this has not impeded Belarus to be among top 5 of those who are confident about their future. Belarus is among a few countries that are positive in the index. Lithuania, Poland, Montenegro, and Serbia are top 4, and they are followed by Belarus with its minus 3.6%, 3.6 index value. Belarusians usually assess the situation in the country worse than the financial standing in the family. In last quarters, we can see that this situation is entering the plateau. Similar shares of respondents say that the financial standing of their families and the economic situation in the country are bad. Still, half of them believe that it is a mediocre standing. In this wave of the survey, we decided to ask respondents what challenges Belarusian economy faces and to check whether the respondents are adequate in assessing the challenges that the Belarusian economy has been facing. So the top answer was that half of respondents can see that the qualified staff leave the country. Top 2 say that sanctions affect the country, and the top 3rd is the conflict between countries, neighbors. The fourth factor is the decrease in trade with Western countries. Top 5 is the weakening of the Belarusian ruble. Number 6 is high inflation. Number 7 is getting it harder for sole proprietors to register themselves, which explains the complications in the business environment in the country. And that number 8 is the decrease in the number of the employed population in the country, which indicates challenges in demographics. Those who believe that Belarus has no economic challenges, these people are only 2%. The share of those who are challenged to answer is 14%. We'd better speak about sanctions. This is challenge number 2. About half of respondents indicate this challenge. If we ask how sanctions affected your financial standing and the economic situation in the country, we can see that the effect on the economic situation is considered to be worse than the effect on the financial standing. 65% believe that the economic situation in the country has worsened. It is evident that any economy faces both challenges and they cope with challenges, and they face successes and failures. So we decided to find out who are responsible in the Belarusian economy, both for success and failure. It's an interesting landscape. The majority of respondents say that both successes and failures are courtesy of the Belarusian government and the Ministry of Economy. Then they are followed by the National Bank, the Central Bank of Belarus, which is largely responsible for success. 23% believe that they are responsible for 38% believe that the National Bank is liable for that, and then the population of Belarus, 23% believe that the National Bank is responsible for success, and still the population is responsible, as well as the national business, for success, but not for failures. And also we can see that for example, the Belarusian respondents can see the role of the Belarusian private businesses and the state-owned enterprises that should be appreciated for success. The governments of the EU countries, the government of the US, the government of Ukraine, not those who are responsible for the failures of the Belarusian economy. Only 14% of respondents blamed those for it, and there's a high share of those who are challenged to answer the question about the failures or success in the Belarusian economy. This share is quite large. And right now we decided to see what fruit will the experiment bring if we see the answers of the respondents to the question, do you believe that Belarusian economy copes well with the consequences of sanctions? 38% of respondents believe that the Belarusian economy copes well. 28% reported that Belarusian economy is not successful in facing the challenges, and 34% are challenged to answer. And then we gave two messages to them. We explained to them that the Belarusian economy, starting from 2020, is under severe sanctions that deteriorated in 2022. And then there's a positive statement that despite that, the growth of the economy in 2023 was 3.9%, which exceeds not only the forecasts of independent researchers, but also the goals of the government for 2023. This is absolutely true. Then the negative statement was the failure of the Belarusian economy was 4.7% in 2023. It was in 2022. In 2023, it recovered, but not good enough in order to recover to the level of prior to 2022. It was a negative context, and we asked the question whether the economy copes with the challenges well. So the negative statement has not affected the answers of respondents. Still, one-third, and one-third believe that the economy copes well, not well, and the challenge there to answer. So we can draw a conclusion. The judgment of the Belarusian economic reality is based on the negative interpretation of the economic reality. People are used to perceiving the economic reality as something that is not successful. But despite that, despite the negative message, about 40% of respondents still report that the economy copes successfully with these challenges. Still, if we give a positive statement and if we say that there was a growth in 2023 and it was higher than the expectations, then this increases the share of respondents who believe that the economic situation in the country is successful. This share does not grow a lot, but I believe that if we do this in the long-term perspective, then we will see a significant gap. Still, the number of people who are challenged to answer is growing. It is clear the more information you have, the more conclusions you can draw. Conclusion: the consumer confidence index decreased by 1 percentage point and amounted to minus 4.8%. Respondents still prefer to spend more than to save. The share of respondents reporting a decrease in income decreased to 26% at the lowest value. Respondents adequately assess the challenges faced by the Belarusian economy, and the positive presentation of economic news increases somewhat the level of optimism of respondents. Thank you for your attention. Our next presenter is Dzmitry Kruk, who will dwell on the main trends on the macroeconomic situation. I would like to remind you that in chats in Zoom and in YouTube, you can post your questions that will be read out loud after the presentations. We will devote some time to Q&A live after the presentations. Hello everyone. I will start with two disclaimers, two ones. One is not traditional. Usually I say that the part presented by Violetta is based on surveys and my part is based on statistics. Therefore, there can be some difference. And the second, a similar disclaimer. In this situation, we are focused on Q1 2024, and Violetta dwelled on the survey in Q2. And the third disclaimer, because of the technical particularities of the survey, we present Q1 with a little delay. This means that we have managed to see the data for April. Those of you who are interested know that they were not really expected to the best way, but they turned out to be more positive than most of the analysts had predicted. And indirectly, this April syndrome, I may call it this way, is counted in some of the characteristics here beyond the Q1, but I have a disclaimer. My colleagues and I discussed it, and I believe that Anatoly will get back to it. There are some things that are questionable to us, but still I'm quite conservative. I do not think that this data will significantly change the landscape. However, the characteristics have seen a significant shift. Let me start with the traditional teaser. It's an overview of the entire presentation. The key thing that happened in Q1 2024, the first highlight has already been mentioned. Our previous presentation made by us, in this highlight we had the thesis that growth faded away in Q4, and it was very likely in Q1 that the growth would be around 0%, but this conclusion was wrong. That is the main headliner here that we should focus on. Next, I will try to explain on the one hand why this happened, on the other hand why in my view this large picture has not changed. Technically speaking, inside this growth from the demand side, the key driver is the household consumption. What we can see in household consumption is a unique spurt. It was in the Belarusian economy, and I will refer to a similar period that we had in the past. Domestic demand, after having a long period of solidified growth, now we can see various trends. And investment demand, after hitting the bottom in 2023, lowered in Q4 versus previous quarters. After that, we can see that after this important instrument, we can see a significant growth in real wages. In my view, this is one of the very disputable trends, and it has very convoluted consequences. External demand has in export after the physical volumes of exports lowered in Q4. The exports have skyrocketed again, and imports have not recovered. The external market demand is the same, and in the labor market we are seeing the same situation. And then, speaking of the diagnostics, how to explain this large picture, I'd like to reiterate that we still have serious question marks here, but my vision of what happened in Q1, one of the key factors that explains the reasons, not technicalities, but the reasons are the inertia of consumer optimism presented by Violetta, and this mechanism affects the output dynamics, the positive spur in external demand. This is when we get back to the peak values in 2023. We are back to these peak levels. They are positive trends, and we can see this disputable trend. This is a very high growth in salaries, and a traditional thing that is the stimulating policy pursued by the policy makers. And once again, why this large picture has not changed. Last time, well, probably starting from mid-2023, we spoke about expanding macroeconomic disproportions, and this particularity has intensified. Let me show you the pictures on the highlights that I have voiced. First, output growth, I will reiterate, is quite unexpected, both in figures and in the dynamics and in the quality characteristics that we could see in Q4 and in Q1 gave us no reason to foresee this jump. However, it has happened. Right now, we are entering a new historical peak. Certainly, it is not higher than Q2 of 2022, but those of you who want to, you can say that our GDP is higher than the previous historical records. Let me dive into the technical detail. Those of you who are friendly with the data and know how to process data, you will see that the trend in the last two quarters, this is the divergence of data, and this is the smoothing of data according to various methodologies. In Q4, as we assessed it in previous data, the growth almost faded away, and right now it is up and running. And this methodology that we see here, it does not show you a radical change because this is a smoothing methodology, but still we can see significant deterioration in growth in Q4 and a significant growth in Q1. Still, as one of the factors, we can mention such an indicator as labor productivity. This is the indicator that is easily calculated. It can be disputable, but still it is correct. Formally, we can say that this growth is followed by some quality growth, but then if we adjust this to the labor market, we would rather say that this tremendous labor productivity growth is offset by the number of those who are employed, which means that there are many layoffs, and also the return on investment on capital. We can see the breakthrough point in Q4, and this point is true. This is one of the early indicators of the investment dynamics to enter this downhill trend, and this trend may become solid. Now this is the visualization of what I have mentioned. The key driver is domestic demand. This is very important. External demand indeed showed a positive contribution in the dynamics of output, but it was offsetting the losses incurred in Q4 last year. So, yes, we can say that in this quarter, net external demand contributed, but the key driver is the domestic demand, and this is mostly about household consumption. We can see the decomposition of GDP growth contribution of aggregate demand components. We can see the accumulation of capital and all other components merged. So we can see that after having some investment spur that happened in 2023, today we can see the yellow line that is negative for the first time in the year. I wouldn't pay too much attention to it. There's no guarantee that this trend is sustainable, but however, this trend can become sustainable. But what is more important is the contribution of the red bars, which is the domestic demand. The domestic demand, household consumption, is the key driver that pushes domestic demand and the economy in general. And here we illustrate how what are the ratios between household consumption and real salaries versus GDP growth. We can see this is evident that salaries and consumption, this is predictable. They follow one another, but they are the driver that tows output and accelerates output through growing demand. And this is the trend in Q1 of 2024. We shall be cautious when interpreting this. This return on investment goes down for a while, but if this trend continues, then, as Violetta said, we can broadly say we can exaggerate that we eat out possible savings. In normal terms, the money could be saved, but now this money is channeled to consumption. So we can see that the growing trends in investment demand and in the consumer demand may become sustainable if this trend fixes itself. External demand, and this is the other important thesis. If we look at what happened in Q1 of 2024, we can see that external demand has grown. It has a positive impact, but there's a disclaimer. This is getting back to the peak of values that were reached in 2023. This is not conquering new heights, but this is about getting back on the same hill. Therefore, one of the messages requiring additional evaluation and research is as follows. Russian demand is first unstable. We can see it for the last a year. And second, Russian demand does not guarantee further growth. These statements seem to me quite justified, but I will repeat, this requires additional further research and evaluation. However, this rollback does not let us say that something unique has happened, that there is nothing new back to the volumes that we used to have prior to August of 2023, when we were on the hill, and then our exports started fading away. And we can see that this dynamics is explained by the exports to Russia, because Russia is the key trading partner of Belarus today. Looking at the ratios between exports and imports, the landscape has not really changed. Import requirements, import recovery continues. There was a drop in late 2023, and this is not back to the previous levels. And then there's an interesting thing. How can this low import intensiveness, and this is low import intensiveness if we compare this to long-term and technological characteristics, and if we look at the indices, then we can see that the import intensiveness is relatively low, and we could expect faster import recovery. This happens, but quite moderately, but even such a recovery is good enough for the physical volume of sales not to contribute positively like it was prior to mid-23 to the foreign trade balance. Right now, the gross ratio between import and export volumes is not getting the balance worse, and since imports, if we look at the period of late Q3, we could see that it was recovering fast. So physical volumes are negative to the external position. Speaking of the price competitiveness, quarter one has not really changed the situation for Belarusian producers. The blue bar is the price competitiveness index. We have two proxies to calculate the real efficient exchange rate and conditions of trade, and this indicator explains the changes in exports in short-term periods. The picture that we can see, these two blue bars that are almost similar, can be interpreted as the price conditions for Belarusian producers were basically the same in Q1 2024 and in Q4 2023. There was a little difference. The conditions of trade has little worsened. The index of the real efficient exchange rate got lower, but in the real exchange rate, for some reason, the slides won't change. Thank you. The real exchange rate index, last time I mentioned it, the divergence in the dynamics of the exchange rate of the Belarusian ruble to dollar and to Russian ruble continued, but it goes in a different direction. But again, there is a trend of strengthening towards the Russian ruble in the quarter. If we look at the real exchange rate index, if we look at the index, it got lower versus previous period, but if we look at the beginning and the end of the quarter, we can see that the Belarusian ruble got stronger versus the Russian ruble. So we can say that the prerequisites, the signals for worsening the price competitiveness of Belarus can be observed. This does not guarantee that this trend will become solid, and this will predetermine the following periods, but this is visible today. And the external position, ultimately a significant limiter for the macroeconomic maneuver versus the previous Q4, has improved, but this must be a seasonable thing. We can see non-seasonable bars, the balance of goods and the balance of services, yellow and red bars, and we can see the difference between seasons is not that critical as the average trend of worsening of the balance of trade due to the negative dynamics and the ratios of volumes and deteriorating trading conditions if compared to the best period from June 2022 until the end of Q1 or mid Q2 of 2023. And there's one more thing to explain the growth that I would like to mention. This is the name tag, the sectoral effects. What do I mean? Non-processing sectors like retail trade. This is the mirror of sustainable growth. Two sectors that are interesting are agriculture and IT. The growth of these sectors in Q1 of 2024 that is not aligned with the domestic demand, but with the intersectoral reasons. It is hard to explain this growth, but what we can see in figures and what can be seen in some quality indicators, this has been affected by the weather conditions, by the bad baseline of 2023, and probably this growth will continue because of the money invested in agriculture. In the IT sector, this is different. Belstat reports the decrease in the IT sector because they compare this with the beginning of 2023, but period versus period, we can say that the IT sector has hit the bottom and the IT sector started growing, which brings a positive contribution because we can see that this is observed quarter on quarter. Despite the positive factors seen in the data of Q1, I'm still quite conservative. Probably these characteristics will be reviewed if we can see that these trends are solidified, but I doubt it. Why? Because we can see growing macroeconomic imbalances. There are three groups. They are quite evident. They have been seen for a while. And the key one is the first one. I believe that this is one of the most interesting areas for research. This is the financial position of Belarusian firms, both public and private. The majority of large companies have not been publishing their reporting since 2021. They do not disclose it. And we can see that the banks evaluate the quality of their assets. However, this indicator is not really valuable. It's not trustworthy. Therefore, we have no clear information of what is gone in the real sector of the economy. And this gap is one of the key prerequisites in order to understand whether the artificial pushing of this growth can continue, whether there is still some capacity to continue this. I believe that the main impediment for the further growth is the financial position of firms. Second is the potential constraint, which does not fade away. We could see the deteriorating external position. If we look at the midterm prospects, it will be there. There is a consistent trend of deteriorating external position, and when we see no sources of financing, there's a big question of how this will enter the negative zone, the trade balance, where to take money to finance. And the third factor to be described by Anatoly, this is that the economy has price pressure and inflationary overhang. This problem is still there. It's the sword of Damocles. It can be there for a while, and one day it can become an investment trigger. And in order to visualize these three disproportions that I have mentioned, because of the excessive pressure on the finances of companies, we can see the total labor costs. Certainly, we adapt to reality, but this is closely related to higher level of costs in enterprises. Therefore, their financial standing deteriorates. I have said that already for the last half year, I have more and more associations with the period of 2013 and 2014. It was the time when they tried to push growth, when salaries were exorbitant, and then in the follow-up, practically the same barriers appeared. Certainly, that situation was a bit different from the today's situation, but that impeded further salaries growth, and then that slowed consumption. I'm not going to guarantee that the same thing will happen in Belarus because we have the labor market shortage, and that is a unique thing, and this is also one of the reasons for excessive salary growth. But exaggerated salaries in terms of costs and negative impact on the financial standing of firms, this is what is evidently there. And what I have already mentioned, the deficit of labor is still in the market in 1 quarter, but I would not exaggerate that one-time spur, but this indicator that is very important in terms of the information in order to understand the labor market. Creating new jobs in any economy, new jobs is a very good predictor to say what's going to happen in the future, how producers see the current situation, what they expect in the future, and how they see the labor market. So probably we can assume that this is an indication that the labor market has hit its bottom and then it will grow, but in order to be sure we have to see that it is solidified. Right now we can see that this situation is still at the bottom and employment continues decreasing, and this indication of new jobs, this indicator is just off the bottom. And the third limiter, this is the changes in the external position. Let's look at the balance of trade in goods and services for the last 12 months. We can see that the average balance of trade has changed over the last 12 months. In mid-2023, we entered a new reality when the balance of trade entered the negative zone, and the balance of trade in services that has always been positive, but this deficit in services is not that significant, and it cannot offset the negative trend, and we have already entered in 2023 in a new reality because years of 2020, 2022 were the exception, and right now we are getting back to the norm. We have the deficit in the balance, and we cannot offset that by the positive balance in trade in goods and services. Therefore, there's a very high likelihood that we are entering the deficit of balance of the balance, and this is very a warning, because the deficit, this deficit of balance is very big challenge. Yes, Belarus can request money from Russia, but there's a big question: what will be the terms and conditions for lending? So I don't think that we can say that we can safely enter the era of deficit, and this will be a large challenge for the economic policy. In the end, I have 2 slides of conclusions. Our current situation shall be seen through the prism of where to put comma in a sentence, and what shall we state? This is the signal that we could see in 2023, the signal that it was needed to introduce a controlled macroeconomic adjustment. If this does not happen, then the disproportions that have already shaped will become impediments for further growth in demand. On top of that, there is such a thing that we could see for the last 1.5 years. All colleagues have been speaking about unstable demand from Russia. We have entered the peak earlier, and right now we are in the range up to the achieved peak values, and there's a fundamental impediment to growing production. But these are the arguments in order to put a comma in the sentence saying that we cannot that we should grow, and there are arguments for that. Growth, for many non-economic reasons, shall be maintained, authorities believe, and this is the largest second cup of the vase, and this is still there. I have not changed this slide. The priorities are the same. The three ones were called by me as relevant, but highly unlikely, but these were the factors that influenced the most. They significantly contributed to acceleration of growth. Therefore, I'm not going to change this ranking, but these tools still can boost growth. And I have looked at this challenge as at the scales. One cup of the scales, this is what can be the barrier for growth. And another cup of the scale is how to grow it. And the general conclusion, it was like in the teaser, is that we should fix the fact that the growth accelerated in Q1 despite all the impediments to it. And I believe that there is no shared vision among experts. These prerequisites are heavy on the agenda. Then the main growth driver is domestic demand and household consumption. And the external demand is not stable. Macroeconomic imbalances grow. And authorities say that we will continue pushing the economy forward. So what can be the outcome? If we look at the figures, we shall not believe that they are the key factor. We expected growth at the beginning of the year, but there is a threat of growing macroeconomic lesions. So these things will affect the economy in midterm perspective, and then there will be an inflation shade for many periods ahead. Thank you very much for your attention. Thank you, Dmitry. And now Anatoly Kharitonchik is going to be speaking about inflation and monetary environment. We are waiting for the presentation to appear on the screen. Hello, everyone. And can we remove this green thing from the screen? Okay, never mind. Hello, everyone. If we wrap up the inflationary situation this year, then price growth is still relatively low despite the preservation or even growth of pro-inflationary value amid the overheating of the economy and the labor market. And why the inflation is so low? there is still the price blanket price controls of the government that affects the transfer of these factors to prices. Thanks to the administrative involvement, the inflation in the base scenario is expected to be 5 to 7%, but not about 10% that it could be without this excessive blanket price control. The National Bank responds to inflationary risks, but it does it in a very inert way and cautiously. Due to that, monetary conditions remain loose or stimulating to the economic activity. However, the scale of the stimuli has narrowed, and in the base scenario, this will continue decreasing in 2024. Now, inflation at the beginning of 2024 was relatively slower than in mid last year. Monthly inflation seasonally adjusted, this is like an annualized price growth, is about 4 to 6% in 2024. In late 2023, it was higher than 8%. It was getting close to 10%. And this slowdown in inflation is mostly associated with the lower dynamics of its non-base component, non-core inflation. You can see this as the gray line on the gray line on the right chart, and how the prices worked with prices and tariffs, regulating them, and also prices for fruits and vegetables changed once seasonally adjusted. This has been affected by the seasonality, and also the gas subsidies from Russia changed. And core inflation, this blue line, continues low, about 4 to 6% per month, annually presented. And today, inflation, its level is close to the indicators of 2019, and which is more interesting, the distribution of price growth in the consumer basket is similar to the patterns of 2019. However, in 2019, we have ensured price stability, and the economy operated close to its macroeconomic stability. Today, there are other conditions, and this can be seen in the dynamics of non-regulated services, prices for such services. Look at the left graph. Prices for non-regulated services have been growing faster than the price growth for non-foods. Today, non-regulated services are quite expensive. Such discrepancies have not been seen in 2019 and 2020 prior to post-COVID recovery. And we can see that in the economy, we can see an inflationary overhang. So there's the potential for prices to grow faster if the price controls are softer. And why inflation is close to 2019 values today? Well, first of all, the conditions on the economy are different today and back then. Right now, we can see excessive demand, record-breaking capacity utilization, labor costs grow, price pressures in the world and in Russia are stronger. If we look at the input of the growth factors, external demand, salaries, and inflation, in 2019, they were neutral, so the inflation was close to its inflationary expectations. Today, this contribution of the demand factors and salaries and external inflation is very pro-inflationary, and the only de facto limiter to inflation is still blanket price controls. preventing the pro-inflationary factors to transform into price growth. If we try to eliminate the impact of price controls on inflation, then right now inflation would be not 5 to 6%, but it would be close to 10, 11%. As said, the key inflationary pressure is generated by excessive demand in the economy and overheated labor market. You can see that the output gap is not only positive, it has expanded in Q2. Q2 has been evaluated based on preliminary data. This evaluation may change once we get the actual figures. It was more like an assessment, but we can say that in the overheated economy, this excessive demand has expanded. This is about 3% of potential GDP. And the factors that overheat the economy are still the same. This is looser monetary conditions, growing budget expenses, especially social expenses, and a tremendous growth in salaries and overheated demand in Russia, which is not going to stop, but it continues to grow. I would mention one more thing. Recently, the significance of monetary stimulation, market stimulation, in order to sustain excessive demand or in order to grow demand has been lowering, but such factors as the household income growth and overheated external demand in Russia play the key role. And domestic producers lag behind this level of demand. Production capacities have been fully utilized, and the key limiter is the deficit of labor. I believe that this is an evident indicator of the labor market deficit. This is the ratio of those unemployed to vacancies. In Q1, this value has exceeded its lowest value. We have like one unemployed per one vacancy, and the labor market makes a double inflationary hit, inflationary punch. On the one hand, it may not adjust to the deficit of growth because you cannot grow labor without raising inflation, and salaries have been growing and exceeding the inflationary neutral levels. As I said at the beginning, the National Bank responds to the economy overheating, to the risks, to growing inflationary risks. But the National Bank is quite cautious when doing it. First, it is not independent from the government, and second, it cannot really influence that. It has raised the reserve requirements to banks. It provided access to ongoing operations for regulating liquidity, and this contributed to removing excess liquidity in the market. So the markets no longer have incentives to place their money at the rates that were lower than the overnight interest rates of the National Bank. It used to be 1 to 3% earlier, but right now it is about 46% still. Since the auction operations have not been executed by the National Bank, since excess liquidity is still there, the interbank interest rate is stuck to the lowest corridor set by the National Bank, and the interbank interest rate of 4 to 6% is still lower than the inflationary neutral equilibrium level. The monetary policy is still loose, but the degree of this looseness, the degree of this stimulus has narrowed in Q1, and it is very likely to be the same in Q2. And despite um, the limited interest rate and the interbank market has slightly shifted interest rates and deposits, and this has exceeded this has been shown by the lowering inflationary expectations, but still interest rates on loans and deposits are quite loose, stimulating the economy, but this stimulation has narrowed if compared to last year, and market lending to corporations offered at interest rates that are close to neutral level, as well as the lending programs for the retail market. Even this decline in the stimulus is not good enough for the economy to get back to the equilibrium level. We can see that the credit activity has intensified in Q1. If we look at the credit impulse, if we look at the changes in the volume and the scope of newly issued loans, we can see that their ratio to GDP is over 70%. This is the highest figure for for many years of observation, and I'd like to say that this indicator, the credit impulse and the change in the scope of new lending programs is aligned with the business cycle, the dynamics of the output gap, this indicator of the economy overheating. Therefore, we can be speaking about the macroeconomic stability based on this indicator, and the credit gap that is frequently referred to by the National Bank that measures not the ratio of the newly issued loans, but NPLs. This is the indicator to assess the risks of financial stability, and it was invented in order for trace that. And it's a link to the macroeconomic stability is not really evident, as proved by many studies. We can see that there is the growth that has slowed, and real money supply and demand in the economy have slowed down in Q1, but this is because the largest portion of new loans is used in order to repay legacy debts, but the monetary conditions are still loose, maintaining high credit activity, and the fact that in the overheated economy non-monetary factors play their role, and the demand for credit grows. And banks give these loans, and enterprises take these loans to repay old loans, and then they have less money to grow their output. So we can say that in the conditions of loose monetary conditions, own assets can continue this process. So excessive growth in the economy is supported by loose monetary conditions, and this excessive growth is affected by the deterioration in foreign trade. We can see data presented as seasonally adjusted. External trade in goods and services in Q4 started. This deficit increased in Q1. This is 1.7% of GDP, but this is not a large scale of the deficit in my view, and we can see that this has been reflected in the current foreign exchange market, but not significantly. If we seasonally adjust the forex market, we will see that this has been insignificant. In April and in May, we can see that net demand was a small one, and this deterioration in foreign trade is seen in firms and in non-residents. Their total balance has moved from a net sale of foreign currency to net purchase of foreign currency. At that, our households are quite stable when being a net seller of foreign currency, and this can be explained by the fact that short-time deposit interest rates for households are close to inflation neutral levels, so the share of income invested in Belarusian ruble short-term deposits has hit the maximum level over many previous years. In this situation, when there is some pressure in the forex market, exchange rate feels quite confident. Belarusian ruble is undervaluated, but this is about 2%, so this still maintains price competitiveness of Belarusian producers. On the other hand, this has a pro-inflationary pressure in the domestic market, but this is a small one, and the effect of the exchange rate on the inflation is strengthened because of the higher inflation in Russia. It is higher than the target value, and it will be the same in 2024 and in 2025. And this Russian inflation transfers this exchange rate in Russia to the domestic forex market figures in the domestic market through the exports of the domestic goods, and the aggregate monetary conditions which present the combination of the foreign exchange fluctuations from the inflation neutral levels. Then in Q1 in preliminary assessment and in Q2 they were loose, pro-inflationary, stimulating economic activity. However, they generated a smaller stimulus predominantly because the interest rates have increased. In the base scenario, I believe that the National Bank will continue responding to growing macroeconomic disbalances by doing it very cautiously. It will leverage its available instruments, and what these instruments can be. Most likely these will be prudential measures like the standard risk values, maybe some limiters for the credit load, maybe the norms of provisions, maybe this will be about the interest rates for the overnight deposits, but the interest rates and the economy will continue growing, relatively slow, but they will continue growing. Credits will enjoy an interest rate of about 11% between legal entities and individuals by the end of the year, and the stimulus for the economic activity will narrow, but still monetary conditions will continue being stimulating, and this will be one of the factors to support excessive demand in the economy. And other factors for 2024 will be the overheated economy in 2024 and growing budgetary expenses, especially social ones, plus some quasi-fiscal operations like guarantees, securities, etc. So the economy will continue amid excessive demand. Our output gap has expanded in Q2. It will continue being positive. However, in the base scenario, it is expected to narrow. And in the base scenario, it is expected for this gap between demand and supply will be partially covered by the adjustment of supply, but mostly because of the weakening demand in the external sector in the second half of the year. This will be affected by the strengthening monetary policy of the Russian Central Bank. And speaking of the domestic demand, it is very overheated, especially in the consumer segment. And when financial standing of firms has deteriorated, though not critically, the prospects for rapid growth in the future is quite limited. However, this process expects that in the base scenario, this adjustment to demand will be quite longish. The economy will continue operating when overheated, and external trade may stay in the deficit position. I continue forecasting a moderate deficit of about 1% of GDP. And in terms of the forex rate, this will mean a little pressure on the Belarusian ruble to weaken. And the base scenario expects that the Belarusian ruble will get 4 to 6% weaker by the end of this year versus 2023 versus the foreign currencies basket if there are no heavy shocks. And this forex rate trend will bring us to about 2% of fluctuations. The economy will continue operating in the excessive demand conditions, so the labor market will see deficits and it will be overheated. It's relatively difficult to overcome this challenge, and when there's a high demand in Belarus for Belarusian economy, there are prerequisites for a normal acceleration by the end of 2024. You can see that pro-inflationary factors will continue being significant, but price controls will continue limiting this transfer into prices. So price controls will continue be exercised as before till the end of the electoral campaign in mid-2025, or until the financial standing of companies becomes critical. But I see no reasons for that. Therefore, the base inflation will be 5 to 7% in the end of 2024. I have numerously mentioned that the likelihood of the base scenario to implement is lower than usual because there are multiple factors of uncertainty. Dmitry has already dwelled on them. I am not going to be listing them again. I will mention just one of them. Right now, both Belarusian and Russian economies are in the phase of structural transformation when some production and logistic chains were broken, other were built, sanctions changed, so adjustment has been going on and on. And in this context, when we look at the economic variables to see the economic overheating or inflationary pressure or risks for macroeconomic stability, then these assessments are very uncertain. You have probably noticed that I decreased the previous year assessment of the economy overheating, and at the beginning of this year, I don't think we can argue that the economy is overheated when production capacity is utilized fully since 2013, when real salaries are 20% higher versus 2021, when household consumption has increased by 16%. Non-regulated services grow in price very fast, but the fact that the pressure on the forex rate is not significant. It's quite moderate, and yes, the financial standing of firms has deteriorated, but this is not a critical situation, I believe, and the economy continued growing at a rapid pace amid a non-strengthening monetary stimulus All of these factors enable us to assume that overheating of the economy in 2023 and in 2024 is lower than expected. Therefore, the equilibrium GDP, the output not generated that does not generate a macroeconomic imbalance is not there, so we can make a few conclusions for the future. First, the likelihood of GDP growth by 3% or a bit higher has increased significantly, and today my base scenario is that the GDP growth by the end of the year will be 2.8 up to 3%, and this blue line shows that this output gap in Belarus will start decreasing by the end of the year. There will be less inflationary pressure than had been expected before. Second, there are higher chances for hitting the GDP target of about 4%. I would assess that the likelihood is 30 to 40%. So I would say that these chances are relatively significant. And if the economy was not overheated strongly and there was a better chance, then this will mean that the overheating by the end of this year will not be 5 to 6% as predicted earlier, but 3% rather. So this overheating will be lower, and it will not affect the inflation and the forex market as significantly as predicted. If this hypothesis is true, and we should give us chances, but if in this environment of structural transformation, this growth of the economy is seen in Q1 and in March and April, if this is based on the expectations of businesses on the sustainability of growth to produced products in the long-term perspective, then it is possible that it will not be the base scenario implemented, but an alternative scenario associated with the growth of potential GDP of Belarus. This is because our enterprises and our authorities have responded these new changes, niches in the Russian market by fully utilizing capacity. But today competition grows, and in my view this is not good enough not only to grow rapidly but even to sustain the same volume of production and sales in order for these peak values to be ensured. Therefore, it is important to invest in growing productivity and to expand the production capacity. We have not seen investment growth. Only in March and April investment started growing. Therefore, investment is an indicator. We have to monitor investment. This will be the indicator of what scenario will materialize, the base scenario or alternative scenario associated with the growth of potential GDP. If investment grows sustainably by using domestic assets and corporate assets, then this alternative scenario will materialize. This is the black one. And if the economy grows 4 to 6% this year, then if this is the inflation, then the overheating in the economy will not be critical. Look at that period. In 2011, 2014, the output gap was higher than 5%. It would not go lower than 2.8%. I mean that this overheating does not mean that there will be an abrupt crisis, but the economy has become fragile, and any large-scale shock can cause that. That's it. Thank you. Thank you, Anatoly. Right now, we still have a few minutes for Q&A. If there are people in this conference room to ask questions, please take a microphone in order for people in Zoom to hear you. Do we have any questions in the room? If not, then I will read out loud the questions asked in registration first. what will be the right assessment of the energy efficiency of the national GDP in the long-term prospect? Who is ready to answer that? Frankly speaking, I am not an expert in the energy sector, and I would advise to look at intersectoral balance and then look for energy intensiveness in the economy there. It is quite difficult to do that. I don't think that this is the event where we could speculate about it. I think we have to look at the intersectoral balances and then to see what can be taken from there. Thank you. And I think that you have partially answered the question amid the economic growth in 2023 versus pre-COVID and post-COVID times, when new stagnation signs will appear. Look, I'm going to say that I see no signs of us living stagnation. We have been living in stagnation for the last decade, and a little growth this year. Maybe in Q1 2024, we can say that we have exceeded what we had in 2021. So stagnation is the lack of development in the long-term perspective, recovery from the bottom after sanctions were introduced in 2022. This does not mean that we have a boost growth. It was a recovery growth, and right now we can be speaking about the trends of this recovery growth. So stagnation is still there, but if we put those things that I've mentioned aside, however, these are the key things. What would be the most vivid signs of stagnation? For example, Anatoly has already dwelled on that. Investment, when firms, and I would look at private businesses because the logic of public business is quite perverted, when the state investment programs, government programs, or directed lending, they play their role. So we'd better look at private investment, the volume and quality of the investment, and also we can look at investment in residential areas and real estate. This also is a good indicator. Another indicator of stagnation or non-stagnation, I always keep an eye on it. This is the indicator of new jobs, not short-term changes, but long-term changes in the labor market. This shows the perception, the expectations of private companies. If you fire one person and hire another one, it's another story. But creating a new job is about the development process, about conquering new businesses. If we had such a situation when there are no jobs like that created, then it would be an indication of stagnation. And there's another thing that indicates the dynamics in the public and private sectors. In recent years, private sector has been quite frustrated, I would say. In the previous decade, the situation was different. Private sector would not be that frustrated, but however, there was stagnation. Larger labor market activities, larger private sector investments, better expectations, financial characteristics of the private sector. These are the indicators of stagnation. Thank you. During the presentation, there were a few questions individually addressed to Anatoly and Dzmitry. Anatoly, the exertion of other factors of inflation in 2023 means that does that mean that the inflationary overhang will disappear? But how can it disappear in the conditions of Government Resolution 713? I mean that after the presidential campaign ends in 2025, price controls will not be that harsh as today in the aftermath, for the firms not to suffer that much. But I don't think that the government will say raise prices as much as you want. No, this will be gradual changes in the rules and conditions, and this inflationary overhang will fade away gradually. This will happen until the end of 2025, and this will be still in 2026, but not as high. Another question to Anatoly. The inflation decomposition graph shows growing expectations, but the National Bank lowers its expectations. If this is true, so will other factors influence that, and the inflationary overhang will get smaller? We have household surveys published by the National Bank, and here we present rational expectations evaluated through a macroeconomic model. In general, they shall not be aligned or match one another, because we have expectations of banks, firms, public enterprises, and the government itself. But in general, I believe that the expectations assessed in the model comply with the logic and the trajectory evaluated by the National Bank. Therefore, we can draw a conclusion that the inflationary expectations are lower than the level of 2021 or 2022. And I cannot say that there is a significant pro-inflationary pressure visible. We have a few minutes left. Let us ask the audience. Do we have any questions in the room? Okay, there's one more question from the chat. Dmitry, how can we explain economically that the IT sector stopped falling? Is it because Belarus is better perceived in the world, or the economy recovers in Russia and in Belarus, and they generate IT demand? You know, it's hard for me to judge because I'm not aware of these things. I look at the figures. I do not have general understanding of the IT sector domestically, but I simply state the fact. In Q1, this growth has started, but I'm not going to provide more comments because I did not dive into the details of the recovery in the IT sector. Okay, the last question goes to Dmitry. The index shows that the exchange rate is distorted versus the Russian ruble. The first prerequisite that I would mention, I wouldn't take the historically average value that should comply with the equilibrium neutral level. The equilibrium historic average value changes. Now it can be close to some equilibrium level, but this does not mean that it is constant, that it's going to be like that in the future. The second thing, I don't want to dive into these details. Anatoly has already mentioned it, the Russian market and demand in the Russian market is very unstable. And this predetermines this equilibrium of the foreign exchange rate. Let me say that the foreign exchange rate can be called equilibrium due to various reasons. There can be like 7 reasons to call it like that. So we have to see what explains the neutral external position in all trade. But can we refer to the foreign exchange rate in Russia? Okay, this reasoning can be efficient in short-term perspective, but if we look at the stable level of exports that can be channeled to Russia, this question, the answer to this question is not evident to me. Therefore, I wouldn't say that this picture predetermines any equilibrium. I have a brief comment. If we look at the effective exchange rate, foreign exchange rate, we can say that this is close to equilibrium, and there is some inflationary pressure. Thank you. We have a few questions left, but our time is over. We will pass these questions to our researchers, and we will answer these questions in our publications. Thank you all for all who participated, and see you in the future. Thank you.